It's been another up and down week for Palantir stock. After initially surging early in the week, the stock cooled off again, but there has actually been some important developments for Palantir. So what the hell is going on at Palantir, and should we be worried? In this video, I will explore this and much more, as well as what I consider to be a huge opportunity over the next 2 weeks. Now we've got a lot to get through in this video, so I will keep this intro short. But if you find any value in this video, can I ask you to smash the like button? It literally costs you nothing, but it helps me out so much. I'm aiming to get 500 likes on this video. Help me achieve this goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence and try to answer the question later in this video. But for now, let's get straight into it, with first looking at the little issue of being excluded from the S&P 500. Palantir was left out of the S&P 500, but it still looks a buy. As we found out on June 7th, Palantir will not be one of the companies included in the S&P 500 index. In the immediate aftermath, Palantir stock dropped 2%, but the stock was up 7.7% for the week before the announcement. Now, obviously, shareholders are disappointed that PLTR stock was not included in the S&P 500. However, this seems more like a temporary setback than a permanent exclusion. Now, if you followed this channel, I made a video 3 weeks ago talking about a huge opportunity to make huge gains leading up to the possible S&P 500 inclusion. Now, obviously, I was disappointed that Palantir was not included in the S&P 500, and I got a lot of comments calling me an idiot for thinking that the stock was going to be included, and a lot of stupid comments saying that the stock is going to nosedive now. But I do have to wonder, did these people even watch that video at all? I spoke about a possible double your money opportunity leading up to June 7th. But this was not about the stock doubling in price. This is about the insane options opportunities that were available. Quite literally, I was talking about the $22 and $23 call options for June 21st. As you can see here, looking back at that video from 3 weeks ago, these options were 49 cents for the $22 calls and 26 cents for the $23 calls. Now, for anyone who took this on board, did a little due diligence, and decided to follow this, made far more than double their money. Even today, these options are now worth $1.68 for the $22 call and 85 cents for the $23 calls. That is a gain of over 200% on the trade in less than 3 weeks. So let me know your thoughts in the comments below. Did you follow along and make a huge profit here, or are you one of the people who left a stupid comment? But interestingly, the stock is now $23. Do you think that Palantir is going to go up or going to go down from here over the next 2 weeks? And I have just loaded up on another set of options trades for the next 2 weeks. June 28 options for another stock that is a multi-bagger options play. Drop a comment below to find out more about this. Now, while Palantir's exclusion from the S&P is disappointing, they did announce major new contracts. A $50 million contract with Tampa General Hospital, and an initial $153 million order from the US Department of Defense to make licenses for Palantir's AIP platform available across the DoD. The award has the potential to grow to $480 million over 5 years. 3 reasons to buy Palantir stock and 1 reason to avoid it. Now, this is a very interesting article, so there is a link to this in the description below if you want to read it in full, but I'm just going to go over the main points. So Palantir has got a lot of attention over the past couple of years, and specifically over the past 12 months, as the AI boom has really taken off, with the likes of Nvidia and super microcomputer going parabolic. But Palantir has been in the AI business since it was founded more than 20 years ago. With Palantir's multiple decades of expertise, it's becoming a top pick for companies looking to integrate AI models and decision making into their businesses. So this article states that Palantir is a top AI pick, with 3 reasons why it's a buy, but also 1 major reason to avoid this stock. So let's take a look at the positives and the negatives. Reason to buy number 1, Palantir's latest product has been a hit. While some of Palantir's AI tools have been around for a while, its latest product, AIP, has been all the rage. This gives clients the tools they need to integrate AI into everyday workflows. By centralizing all data flows into one location, AIP helps businesses make decisions on the most up-to-date information that they have. It also allows large language model integration, which is the technology behind generative AI, which further arms users to automate and streamline workflows. Palantir's management consistently used the word unprecedented when discussing AIP demand, and this platform will be a major revenue driver for years to come. Which leads on to reason to buy number 2, and that is that revenue growth is accelerating. So due to the unprecedented demand, Palantir's revenue growth has been accelerating. In Q1, revenue grew at a 21% to 634 million, the fastest pace since late 2022. But in Q2, management is expecting up to 653 million, indicating a 22% revenue growth. Growth acceleration is something investors love to see, and its quicker growth rate helps justify the stock price. Which leads us to reason number 3, Palantir's margins. So Palantir became profitable in 2023 when it started producing small profits, and since then its profit margins have continued to steadily tick up, which can be an incredibly powerful combination when revenue growth is accelerating. Now, Alex Karp has talked about this loads of times, especially when he's been talking about Palantir maintaining the rule of 40. And this refers to the sum of revenue growth year over year and adjusted operating margin for each quarter. As we can see here, Palantir is not just growing its revenues at all costs. The company is maintaining its strong year-over-year revenue growth, but more importantly, they're improving their operating margins. In the past quarter, their adjusted operating margin of 36% and the rule of 40 of 57% is the strongest and best returns in the company's recent history. Now finally, the reason to avoid Palantir stock, and that's that it's far from cheap. Now it says here that even if everything about the stock is perfect, buying it at the wrong price can be a disaster. And this article uses Zoom as an example. Anyone who bought Zoom in late 2020 is down nearly 90% on their initial investment. Now I don't agree with this example because you could say that about 90% of the market from 2020 onwards. Hell, if you even look at Facebook, Meta stock dropped over 75%. And it didn't start to turn around until late 2020. Since then, it's been on a run and hit a new all-time high this quarter. The same can be said for nearly all major tech stocks. Another example being Amazon, that dropped close to 60% in the same period. At 21 times sales, Palantir's price-to-sales ratio is nearly equal to its growth rate. This normally doesn't bode well for a stock as it indicates incredibly high growth expectations. But is that enough to completely avoid the stock? I don't think so. If investors avoided companies like Amazon or Nvidia because they were too expensive, then they'd have missed out on the massive winners. However, highly priced stocks can be volatile, so you'll need to set a longer holding period of around 5 years to make it worth it. If you can do that, then Palantir could be a fantastic AI investment at these levels. And of course, we like to look at the options plays where Palantir is always a good play if you are looking at future catalysts in the short term and looking at the price action. But another big potential downside that I did speak about in recent videos is the fact that insiders are selling in a big way. Alex Karp has been selling stock, and Peter Thiel recently sold over $250 million worth of stock. But although they've been selling, another major investor has been buying. Over the past 3 months, Cathie Wood of ARK Invest has been loading up on Palantir stock, and in May alone, Cathie Wood bought approximately 1.5 million shares. So what do you think about this? A lot of investors now avoid what Cathie Wood is doing, just like how people will do the opposite of what Jim Cramer says to do. And there's a lot of talk on social media right now about Palantir and what direction people are expecting the stock to go. So always do your own due diligence. Remember that I'm not a financial advisor and this is not financial advice. But if you enjoyed this analysis, then please like and subscribe. And of course, comment down below if you want to know what options trades I am looking at for the rest of June. I hope you make a load of money on this stock. Follow me on Twitter and I'll catch you in the next video.